This video sheds light on often overlooked expenses that are associated with home buying. Knowing this will help you budget more effectively. First item, you know what price house you want to purchase and now you're good to go, right? Wrong. There are hidden costs you need to be aware of before moving forward. Some are optional and some costs are not optional. If you have a good realtor and lender, you will be aware of the majority of these without having to do any digging yourself. Let's start with the non-optional hidden costs. 1. Closing costs. Closing costs are not the same as your down payment. These are separate fees paid on closing day. On average, as a home buyer, your closing costs will be about 3% of the purchase of your potential new home. Maybe you knew that. Do you know what those costs are covering? Closing costs cover your appraisal, attorney, settlement company fees, mortgage insurance, loan origination fee, title insurance, prepaid interest, prepaid taxes, recording fee, the list goes on. And here's a little secret. Some closing costs can be negotiable. In the right housing market, you might be able to negotiate with the seller to cover some of these expenses for you, saving a bunch of money. Appraisal. If you are getting any type of loan to purchase a property, even if it's $1, getting an appraisal done is not optional and it is a cost you will need to budget for. On average for first-time home buyers, an appraisal is around $400. What exactly is a home appraisal? Think of the appraisal as a checkup for your potential new home. When you're getting a mortgage, your lender wants to ensure that the home's value aligns with the loan amount. That is where the appraisal comes in. The appraiser evaluates the property, considering its size, location, condition, and recent sales of comparable homes in your area to determine its value. But what if the appraisal comes in low? This is where negotiations can come into play. You, your realtor, and the seller can discuss options such as lowering the price of the home, adjusting the terms in the contract, or finding a middle ground that works best for both parties. PMI, or private mortgage insurance, is a type of mortgage insurance you might be required to buy if you take out a conventional loan with a down payment that is less than 20% of the purchase price. PMI basically protects the lender if you stop making payments on your loan. PMI allows you to buy a home with a lower down payment. Without PMI, many folks would find it challenging to enter the housing market. If you're putting down less than 20%, which over 90% of first-time homebuyers actually do put down less than 20%, budget temporarily for a slightly higher monthly mortgage. PMI payments are not permanent. Utility payments. You don't make utility payments until you're the owner of the home, but you should consider the average monthly utility payments you'll need to make for your potential new home. This contributes as a hidden cost because most first-time homebuyers are not considering these items when they fall in love with a house. Now, let's talk about the optional hidden costs. You might be thinking, why would I choose to pay extra money? Well, you'll see. The first optional hidden cost is inspection fees. But I already know I'm going to pay for an inspection. That is correct, but that is a general inspection that you're paying for. There are additional inspection add-ons that you may want to consider for an extra cost. Does the potential house have a fireplace and chimney? If you want it inspected, that's a separate cost. Do you want to know if the house has high radon levels? That's an extra cost. Next, discount points. Your lender may give you the option to pay discount points, which is essentially paying to lower your interest rate. Depending on the interest rate you're given, this could save you a lot of money in the long run. Monthly, quarterly, and annual HOA payments. If you do not want any extra fees attached to your monthly mortgage, then you may not want to look at a house that is in an HOA community. HOAs can cost anywhere from $20 a month to $700 or $800 a month, so determine upfront what you're comfortable with and then start looking at homes. You wouldn't want to fall in love with something and then see it has a high HOA payment and then be disappointed. Taxes. Obviously, paying your property tax is not an option, but you can control how much tax you pay each month by choosing what area you are to live in. Each city and county has a different tax rate. You can choose to pay less by choosing to live in the city or county that has the smaller tax rate. Knowledge is power, and knowledge is saving you a lot of money and making sure that you have no surprises during your home buying journey. If you want to continue to know what you don't know, watch the next video and schedule a free 30-minute chat session using the Calendly link in the channel description to choose a time that best works for you.